Well, the Australian share market has posted its second best start to the year in at least 3 decades. Now, why? Well, inflation is on the slide, and it means that the last rate rise is closer than we might have thought a few months ago. Interest rate rises can really hit and hurt our stock prices. And the AFR says Westpac's chief economist, Bill Evans, is tipping the inflation data out tomorrow will show that the annual price rise has peaked at 7.4%. That's really good compared to most countries of the world, but it will slow to 3.7% over the course of this year. And this is well below the RBA's forecast of 4.7%, which is great for killing these interest rate rises, which a lot of us are really spooked by. Now, shares have edged higher for 9 consecutive sessions of gains yesterday, and the index was up 5.7% in January and 2.3% off its record set in 2021. So why are stocks going up? There's a whole lot of reasons, but inflation falling, rate rises look as though they're soon over. China is reopening and growing, which is good for China and also for the world economy. And this is all good for stocks. Now, can you believe the China reopening story? Well, the AFR points out that Hong Kong's Hang Seng Index, which of course tracks the Hong Kong stock market, has rallied more than 11% this year, and the Chinese market is up 8%. Good signs that the Chinese at least believe that it's the economy starting to turn around. The VIX, or fear index, that the US market has is now near 20. It was 30 before October, and that was a really scary thing for the stock market. So that VIX is a fear index, is actually showing some really good signs for investors for 2023. Our inflation story is better than the US, the UK, Canada, and most Western economies. And so could this great start to stock market hit a sell-off? Of course it could. There'll be a lot of smarties thinking, maybe I should take profit now. And they could. But I think what we've seen from the start of this year and all the other factors that are heading in the right direction, inflation, interest rates, China, all suggest to me that over time, 2023 will be a good time for stocks and bonds, despite the fact there could be a few little challenges in the short term. So my bottom line message is the economy is looking better than we would have expected, and stocks are heading in the right direction. I'll catch you tomorrow.